looking at QQQ. Didn't really take a look at the market after the close on Friday. Going into the weekend, no big news, that's all good. Right now, says the pre-market is flat, slightly down, but look at this. This is a hammer, right? The long tail coming in. So what does that tell me? That tell me this breakout, right? So this is the breakout bar right here, penetrate, and then this is the breakout bar. This is my breakout confirmation. Second bar of the breakout, make new high. Alright, third bar trying to make new high, came back. Alright, got a long tail, comes back down. So looks like these sellers kind of in charge on this bar. That's what it's telling me. On the QQQ. Now Spider doesn't have a really long tail. Dow Jones right at that double top. Right, this is the top. This is the top, and this is top. Right on this red line, resistance area. So expect a little pullback, or unless some good news comes out, economic news could be anything, and push the whole thing through. Otherwise, on the QQQ, Nasdaq, you see a little selling on Friday. The Russell 2000, wow, that's a upside down hammer. So yeah, but this is the breakout bar. So maybe we'll come back and test the breakout point. All right, this is now support. Before it was resistant until this bar penetrate. The next bar is the confirmation that it broke down. But now it's the other way. SOXX. Yeah, SOXX a little weak too, right? This breakout consolidation area, the purple box. This is where I open a tray. And yeah, I have a put spread here. I have to go all the way down here for me to start losing money. So that was explained on the last Friday when I opened the tray. That was adjusted. Yeah. When I suggested to trade in the morning, I don't have my trading computer with me, so I couldn't see the delta. When I got home, finally I look at the delta, and this is where I put up 18 delta trade. Yeah. So what does that mean? That means 100 minus 18 at that time when I opened the trade is a 82% probability of me as a seller of the option pocketing the premium. Right, but that's changed. At the end of the day, I checked then, it came back down and I only have 75%. The delta went up to 25, right, from 18 to 25. So that's from 82% of me winning to it decreases to 75%. But I have a long, as August 18, I have 4 weeks of trading day out. So plenty of time for the trade to work out. All I need to do is it doesn't go below this 485 with and minus 35 cents on each contract. So it's actually $484.25 for me to below that for me to lose money. Otherwise, it goes sideways. I won't lose money. If it goes up, all right, and I will start thinking about taking profit. Right now, just leave the trade, let things work out. I might need to hold it 3-5 days before I go. For me, I might need to hold longer, or it can do anything. Right? It can go up, it can go down, it can go sideways. But that's where I open my trade. At that time, I have an 82% winning rate. And as the market move, end of day, I only have 75%. But hey, 75% is huge compared to even if you're a casino owner, right? This is huge. So yeah, this is why my trading have very high win rate. But on the other hand, if I lose a lot more. In actuality, when I look it up, this risk reward is not really that good, to tell you the truth. I would prefer 1 to 4 risk reward. So for every dollar I can win, I might lose $4 maximum. But this one's much higher than that. So, but I want to take the trade anyway. So what on the breakout play? How do I look at it? How do I do a breakout play? And at that time, it was up here when the market opened and it made new high, so I opened that play, right? So this is a breakout bar. On the next bar, that it make new high of the previous bar. Look, I wrote this down. When the price action, after the breakout bar goes higher than the high of the breakout bar. That's this green bar, that's a breakout bar. When it go higher than the high of the breakout bar around, which is here, I open the trade. That's where I should have opened the trade. And that's how it goes. Alright, and breakout, that's the nature of breakout. I get these false breakout. Right now, it's just go back to the breakout point and it stopped right there. Right? So it seems like we'll see. Is it going to try to test? Looks like it's going to try to test this resistance line. Alright, it might penetrate through, take some time, right? And then it might go back up, and yeah. So right now I'm still in good hands, and I just let the market do its wave, do its whipsaw, do its up down. Okay, let's go. Right, let's go. Let's look at other trades possible. Everything came back. Right, this is nice clean breakout, and then it's still on top of that, and then hit the channel. Look, it hit the top of the regression channel, long-term regression channel from here to here. This has a flat pole. This is the pole, and then make this flat, upside down flat pole. So it's actually more short bias. This is the financial sectors. That these guys haven't been doing well since the regional bank Silicon Valley blew up. So you expect that. It's weak, relatively speaking. Energy, pretty sideways action. I don't see anything at this point. So got oil. Just so I know where they're at. $25 a barrel. It's fine. Gold is below the 2,000 line. So it's fighting this. Still above the red line moving average. This red line is the long-term moving average, a 200-day moving average. Kind of represents 1 year's trading day. So it's above last year's moving average. That's what it is. So this red line, a lot of people look at it. I look at it. So staying above. So gold is strong. Yeah. On the long term, still. Yeah. Okay. Let's keep going. Dollar yen exchange rate. Oh, look. Retrace. Come back. Alright. So this is a retracement. Do I want to long this guy? It's an intermediate uptrend. Let's draw a line. Let's find a support line from low of the beginning of the wave to here. Couldn't touch this point. Alright. If I wanted to touch this, then I have to validate those a little bit. Okay. Yeah. No. Yeah. Okay. I touch this bottom, a small bottom here. So this is a better support line than the other one that I drew, which was from here and then touching here. Right? If you look at this only touch here. I have touch here, but here and here. This have to invalidate these bar though, and then touch all these, the more recent ones. So I rather use that one right now, but yeah, leave both. See what it does. Penetrate, and then the next level that support is here. That's what it tells me. Right now the support is here potentially. Yeah, so you have levels, different levels. Bitcoin, whatever. Okay, let's look at 20-year treasury. Yeah, pretty choppy. These guys go silver. Silver is on the wrap up. Interesting. Chinese internet, pretty sideways. FXI, sideways. Baba. A friend was asking me, should we get out Baba if it was long a little on it? And so basically what I do is kind of like, let's look at this short-term resistance line, right? Let's find a short-term resistance line. There you go. I connect 3 tops right here. Okay, 1, 2, 3. This is a short-term resistance line. Touch here, bounced off. So chances are I might have a little retracement before you continue. And looks like it's going to open down. Yeah. So yeah, it's going to open around here when it open right now is. Right. So yeah, that's a good place to sell, and if it come back down more, you get a chance to buy. Where would I buy? Let's see. Let's find support. Here, right here. This is a good support line, my friend. Okay, right here. Look at it. Invalidate this bottom, that's fine. That's kind of like head and shoulder. Okay, this is the head and the two shoulder. So you have a nice head and shoulder, right? So yeah. So when after it broke this, if it breaks up, then here is basically your next level. 102 is where your next profit target. If it go back up, eventually I expect this guy to drift upward. If everything's good news continue being the same. Yeah. Okay. 10 cents. Nothing. Okay. See. Oh, excuse me. Yeah. Apple. Let's look at it. Okay, Apple approaching 21 days, a month. Yeah. So I have a chance to go long. Looking for long. It's approaching. So that's the first point to do. You have to go along somewhere, right? And if you break that line, then it will probably be this red line, support line, the next level. Yeah, but I have to wait. I have to wait for what I call Thor's hammer, when I clearly see buyers come back in. Otherwise, leave it. Put them out. Oh, look at this tail. So I mean, the sellers push it back down. So yeah, you might have a little of that retracement right now. And then if you keep going further of the retrace, then it's a correction. A small pullback retracement. If it came all the way back down and went through where the breakout takes place right here, then there will be a correction. So yeah, I mean, I don't make a prediction with technical analysis. Fundamental analysis, you can make projection 18 to 18 months ahead. That's what it is. Okay, it's a much more long-term investment horizon, time frame, duration for fundamental analysis. And you make projections, probability of the price of a stock going somewhere. With technical analysis, you read the market and you trade after what the market tells you. Okay, I don't make prediction. I learn all my lessons. Read the market. Okay. Yeah, what's the matter? Nothing. Tesla start going sideways. Yeah, so this is a consolidation phase right here. Around here, so in this level. Let's see, I can get a little box around here. There's a very clear consolidation. Yeah, for now. There we go. Amazon. So they all kind of stopping and coming in. It's like it's gonna go for a little retracement. Everything being the same, yeah. So I expect my SOXX trade to come in a little. Just give it time before the buyers come back in and then see what happens. Nothing's for certain, but as I open the trade, the probability of me winning, I mean, pocketing a premium on that trade was pretty high. And that's being everything being staying the same. Who knows, right? I mean, see, Microsoft really a double bottom. You can see clearly this is resistant. That was a breakout, come back, breakout, try again, double top now, right? So it did this, broke out, came right back, right? So that's the problem of breakout trade. Unless the market also, not just the stock, but the market want to carry through, you have these retracement, right? That's why I will always use a put spread if I want to go long on a breakout, and I use a call spread if I go short a breakout. I don't do breakout outright anymore, just on the underlying stock. Uh, that's kind of like 50-50, 60-40 type of trade. I've been playing that all my career, and that's my experience. From experience, I would tell you that. While the continuation of the trend pullback, it's much better to buy on these lower points than buying here. Yeah, you want to buy the pullback. The breakout is a little bit harder, so that's kind of like my second setup is a breakout. But I just want to demonstrate how we take a breakout, and yeah. Oracle. Well, this guy, look, gap broke down, right, and stay up here, bounced this off. That's a pretty good strong stock. Doesn't see a really long tail, small tail, so might have, could have, but then took this trade. Right, this is a good trade, right? And then retrace one, bounce for 3-5 days, take some profit, right? Pick some profit on maybe here, or maybe on the 5th day, depends on it, right? If, yeah, 1, 2, 3, 1, 2, 3. There's some profit. I'll wait for 2 more days. If it goes here, take the profit, right? On the retracement trade. Trend retracement trade going with directional trend. That was a great. That was the highest probability. Oh, NVIDIA, look, long tail. So all these things stopping. Yep. So the stocks are coming in a little bit and see where it bottoms out before buyers comes back in again. Yeah. I have time. I have delta. I have time on my side. I have probability on my side. So we'll see. Goes. Any trade goes either way. So a lot of time option trader right now. I'm actually long delta. Directionally wise, if market goes up, I make money. Market goes down, I don't make as much. Market go really correct, I lose money. That's how it goes. So ideally, if I have also a short delta trade, right now I'm a long 25 delta, right? So if I can do a short minus 25 delta, kind of like call spread or something like that, then I have delta neutral. That's great. Market goes up, market goes down, I have potential of one side making money more than the other side. And then I want to close out the one that make money, leave the one that not making money yet, and then the time works for me. Eventually, when the markets turn around, I will close that one, and then that's how you do options. You want to, if I can find short delta trade, short delta, and so in call spread, that's perfect. If I don't, I don't. Right? You gotta wait. You gotta wait for the market to show its hand, and you gotta wait for the opportunities to come into your hands. You cannot force a trade. Ooh, AMD. Wow, now this is a long tail. This is bad. AMD. This is very, very bad. Yep. So at that point, yeah. Do I want to short this guy? No, it's an uptrend guy. Even with this just tell me, oh, people are really taking profit. But with a longer term uptrend, you can tell it bounced off this level. So by going to this consolidation bracket level, so yeah, just leave it. Don't short this guy. I will short this guy. Okay. Matter of fact, I just want to move the box to the bottom of this. Yeah. But if we retrace and I see this guy, the upside down with TSM over here, then I want to go with long trade. Actually, that's market. That's market. So remember, so I don't make mistakes. Sometimes in the heat of the market, if you make the wrong directional trade, then you're gonna have to close it, right? And the market maker, the bid ask, you have to pay for that. So avoid these in and out. I don't. Right? Heat of the moment. Think it through. That's why I want to do this end of day after the market close, before the market open. And the option is I cannot trade yet. I can think it through. You always want to think it through. Confirmation right here, head and shoulder, right? One shoulder, head and shoulder. So yeah, I say yeah, that's why SOXX is bouncing off the high, and you have to wait for the market to sort itself out. Now, yeah, look at this guy, bounce off the resistance. So they don't want to go long yet. Not really. I want to see more of these guys exhibit buyers coming in. Right now, I haven't seen this buy. Oh, there you go. That's a false hammer. Went up. Right. That's a false hammer tray on AMD. Hugging this line, went through. Long tail, right? Tested the 21-day moving average. The white line is a 21-day moving average. Right, hugging it. Went through it. People decided to buy, and then came back up above. Beautiful. These are the trade. This is a false hammer trade, right there. All right. So this, if I would took in that trade, well, that was what? That was Friday, Thursday, Wednesday, Tuesday. Last Tuesday. I wasn't looking at the market last week at all. Yeah. Taking care of my personal business. That's how it is. Sometimes I don't have time to play, then I leave it. And there's always more opportunity, more chances, more trade down the line. Yeah, you miss some, you can't catch them all. Alright, so if I have taken this trade, the profit target will be here. Will be right at the top of around here. Yeah, right here. Once it get around there, that will be my profit target. I've taken the trade. Yeah. Right now, no. So I will have opened on the next bar right here. 139.54, and then right until 145, 146. Yeah, I think like 146 around there. Yeah, I'll definitely buy the stock a little, but open probably a 18 delta put, maybe even a 25 delta, depends on the price action where the pricing are, and which is should be around down here, the strike price, yeah, on that trade. On Thor's hammer, I would take the actual stock and do option spread. But on the breakout, I'd only do option spread. I would not open the actual underlying. Yeah. Probability wise, it's not as good as a false hammer. Okay. Okay, let's keep going. Ooh, everything is a little heavy coming in. So you see as the pre-markets get down a little. So now I don't really see a trade this morning yet. So I'm gonna come back later in the afternoon and take a look, or just leave it and let it work out for a few days and see what the market wants to do for a few days. Alright, and see any fundamental reason that will move the market up or down, and adjust my trade if I need to. I mean, yes, sometimes adjust my trade. Yeah. Well, that's just my first leg. If it shows a false hammer on SOXX, alright, then I'll open another trade. I will open additional false hammer on the trade, a retracement. I welcome that. That's fine. Yeah. Blackstone. Whoa, interesting. Breaking out. Oh, yeah. But if I pull back a little bit more, it's really just choppy on the longer term. So just interesting to look at. No, not that it's intriguing, but it's not that attractive for me to take this trade actually. Financials this year have to be cautionary. I want to trade with a nice good uptrend. The semis are the good ones. So right now I might go for some retracement. We'll see. And I will find a way to go back in, buy more long if it retraces. Okay, still continue. Nothing much because these guys sideways. It's not a long job. It's just going sideways, and nothing's going on. Not much going on. Draw a line this way. Yeah, touch these and then. Really meaningless, but I know. Yeah, okay, just so I know where the financials are. Ooh, look at JP. So you do have a kind of up and a sideways, up and then a sideways. and then it breaks up, but then right away the sellers come back in. And the market isn't helping it either properly. So yeah, I'm gonna see a little retracement probably to here is a good support level. Right here. This is potential support level. I bet you this guy probably have news. Look at all the financials. Most of them are red except this guy. But then it tried because it's heavy. The whole sector is heavy. So it kind of drag its feet, have pull it back down. That's what that means. Because the whole sector is heavy. Goldman Sachs. Goldman Sachs. Not going anywhere, this guy. Okay, let's see. Occidental Petroleum. A long time ago, years ago, I have a fundamental long on this guy years ago, and it'd be kind of like whipsaw, pretty volatile. Look at the volatility, but it's kind of like on an uptrend until now it's coming off that uptrend. A long term, we have this nice uptrend actually. I mean, this years ago. Yeah, so that's kind of like my only long-term individual oil holding was this guy from that years ago trade. Yeah, I'm leaving it. If I want to sell, I would sell options on top of this guy. That's all. But for now, yeah. So I don't mix my fundamental long-term trade with my short-term technical trade. It's completely separate in my mind. Yeah, separate entities to separate strategy to play. Yeah, you're still just going through, just looking through, looking for trend, looking for retracement. There we go. Break up, snap, $13. Yeah, the up this guy. Yeah, nope. Looking for false hammer, basically just scrolling through all different stock, all different sector. Casinos now. I'm looking at casinos. I'm going through MGM. Yeah, I marked it, but don't took a trade. Yeah, that was nothing. Yeah, MGM. Small little one. Yeah. Oh well. Pfeiffer. And wow, T-Mobile. Oh, that was one explaining how to find profit target and stop loss. I guess this was for explanation on another session. Nothing to do with this. No trade taking place. Yeah. I leave my trade, or win or lose. I just leave it so I can always look back and I mark them. But those are not. The way I mark it is every time when I open a trade, I will have a long position or short position, and I will leave one of these on. And then those get recorded as when I open trade in commentaries, and then when I close the trade. I will leave those boxes in. Okay, let's keep going, huh? Let's see. Zillow. Okay, this guy been up. Yeah, maybe it's not hugging any of the moving average. I have the 7-day, 21 days, and then 50-day. The blue line is the 50-day moving average. It's not even hugging it. So even it's kind of an uptrend, is a little less probability because less indicator confirmed to it. It's hugging this yellow line. It's hugging this long-term line. So if you come back, I see a false hammer, then I'll open the trade. Right now, ideally, of course, it come back and then the moving average, it was hugging a nice moving average. That's fine because most people look at these moving average. That's why. So most people agree on it. Right? You have the 200 moving day average, your 50-day moving average, 21 days, and moving averages. Those are the three big ones. And then you have the yellow one, only 7 days, just That's for momentum traders, really. Short-term momentum, if you do a 7-day, really. But it's not even hugging any of these moving average line. So none of it applied to it. That's all. Invalidated that technical indicator. That's all I mean. So what valid day now? My valid day is this yellow line. I never broke through. Every time it come close, it never go through. So it comes back down. So drift off, and then I extend this line and eventually do a false hammer. I would really seriously consider going long, which I would definitely most likely open a cross spread. Alright, but this, if I have multiple technical indicator that clearly shows what that increase my probability. Yeah, but this one, yeah, market, but for now, nothing. Oh, Activision, right? All these new Blizzard. Whoa, graph. Yeah. This big bar. This is news. This is definitely news. What's the news? I don't know. That was on Monday last week. I wasn't looking at the market. Definitely can look it up. It's gappy because it has. I remember you have this MMA probability. I think Microsoft or someone was trying to buy it out, or they buying something, and if it's M&A, the stock that's going to get buy out will do this gap, and if they okay, not doing it, and they get back down, and then they probably say, okay, we might do it again, and then we do one of these gap up again. It's very gappy, and that's where option seller get destroyed on these gap. This guy is much harder to play because the option because of this volatility, it will get right through. And then as an option seller, you have to be very cautionary playing this guy. I actually marked a triple bottom here. See Thor's hammer right here. I extended that line. That was a trade right there. I took the trade now, really. That's MMA merger and acquisition news on back of these guy. I don't like these big gap. Personally, I don't. As an option trader, a stock trader is kept very painful too if it gap against you. So, yeah, very, very careful taking these trades when they have big news on back of it. Lyft, nothing, Uber, ooh. Okay, yeah, just doing his thing. No false hammer. Again, I'm looking for false hammer. I want long tail rise taking off for whatever reason. Up, sideways. Let's draw a nice box. It went up again. Nice box. There we go. Get this box. Yeah. So just wait for a possible retracement. Again, false hammer. Show me when the buyers comes in. And I go with the trend. Go with the direction the trend when buyers comes back in. That's what I'm looking for. That was the best probability trade. All I need to do is find a couple of these a month. And right. These are the canopy growth. More on the stock. Yeah, this guy. Oh my God, it's going to nothing. 40 cents. Yeah. It was hot a few years ago. This guy was really hot. Right now, nothing. Let's go to Yum Brand. Hey. Alright. Restaurant. Okay, nothing. Nothing. $2,000 stock. Chipotle. So it's hard to but I mean it's just very capital intensive. They don't split it, they don't get small size. Just to know, not really tradable. Right? I mean 100 share, awesome contract, right? 100 times 2,000. Right? It's 200,000. Yep, that's too capital intensive to even on the option. If you're retail, of course, if you trade for the company, that's a different game, right? You trade, millions, hundreds of millions, yeah. Dunkin' Donut, nothing. Home Depot, nothing. Lowe's, nothing. Long tail 47 coming back in. Upside down 47 coming back in. Right here. There's a previous. This is a breakout point. Let's draw a line. There we go. Let's get this line out. Yeah. Okay. Whoop. What did I do? Nope. Did I move this? Okay. There we go. Peloton. My God. $9 stock. It was a one-time thing during the pandemic. Everybody was on the lockdown, staying home, exercise, right? When the lockdown's over, no matter what you do, people go back to gyms, people go back outside to exercise, and that's it. End of the run. Those are just fundamental. Sometimes you have to just use logical reasoning. You're like, okay, is this guy going to continue to go to where it was? Okay, where it was. My God, look at this. It was pretty high, 100 times actually. I remember it's like 200 something. So now it's worthless. The stock is worthless. I don't even think about playing. This low price, nothing much to do. Yeah. Okay, Neo Z. These guys, nothing to do now. Wow, look at that. Broke up. Pulls back. This is where the breakout. Yep. Okay. Support. Lee. Interesting. Right. Now that is a false hammer, right? But the pullback is not significant. It's just on this short-term trend, it's staying above this, right? Ideally, I want sellers come in and test the white moving average line, which is 21-day moving average line, and then it do the long tail. That means the buyers come right back. Will be a better trade right here. No, there's no reason to trade this yet. I have it marked. Keep watching, keep looking for it every day. See if there's any possibility. Oh, look, below 200-day moving average. Bounced off this 200-day moving average, very clear. Right here, it stopped. Right where 200-day moving average is, right there, it will tell you. So, stock that below 200 moving day average is not really a good long candidate, fundamentals wise. Okay, for the long term. Short term, you might do a lot of things. Who knows, right? Then use technical indicator for price action confirmation. Okay, confirmation is everything. Yeah. So let's go to these fintech company, financial technologies. Yeah, nothing much. This guy, nothing. Oops. Spotify. Kind of like on this up channel, but not much going on. Yeah, this is kind of like probably temporary end of this uptrend. So everybody getting off the boat, taking profit here. That's a taking profit bar. Yep. Robux, Innovation, Shopify, Robinhood. Nothing. Let's look at this. I skipped Innovation Home. So I have a trade here. I was short this guy actually. It was short spread. And then eventually he came back in and I closed the trade from here to here. For a long duration since after I opened the trade, it didn't look good, but it never went through, and I still have a lot of time actually. I open a trade at least, ideally is 45 trading days out, so a month and a half, to 4 weeks. So I have that time, at least 4 weeks. So I do this for 2 weeks and then decide to come back in, broke down, and on this bar, I say, okay, That's good enough because it's a weak trade. It's not a strong trade. It took me 2 weeks over there, and then I say, okay, take a little profit, close it. I make $55 on each contract in this trade. That's all. That time worked out for you. So it worked out. All right. And then if I held on, eventually, actually, I would have really took the loss then. All right. So you have to look at the trade. After you open the trade, what is the market doing? What is it doing? Does it look like one comes in? And this one definitely did not want to comes in. Actually, it went up. I went against my trade directionally, but I'm still within my buffer zone, still within my safety zone. And eventually, when it goes for me, I say, that's good. All right, right here, that's a good point. It goes to trade, goes through it. Next day, it actually reversed and came back up, and then yeah. So that's trading from experience. That's why you want. Once I open a trade, now I gotta look at the market every day. I will give it time, but I'm looking for these possibility that I can reach 50% of my full profit potential. Right, this is my full profit potential to here. If it dropped to here, that's more than a little bit 50%, right around 50%. I can say, and that's a good trade. Took it. I turn a loser into a winner. That's why. That's why you can do that. Okay, using options. And you do the directional, but much easier on option. That's what it is. Yeah. And sometimes it just start going for me. 3-5 days I close the trade. A good trade, make the money. I trade for good trade, and the money comes with good trade. It's really that simple. Bad trade, you leave it. And then you have a maximum loss set anyway on my option spread, and sometimes it happens, right? That's the nature of trading, right? Risk and reward. Okay, start somehow I marked it. Oh, so in this, didn't have a chance. This guy, nope, didn't have a chance. I marked it. Interesting. Zoom at one point very high, below 200. Look. Right here it stopped. What it's going to do, I don't know, but it's below 200 moving the average, this guy. Okay, this is actually kind of like an AI stock, I remember. Yeah. These different stock, I just want to look at it, see what it's doing, nothing much. Yeah. Target, retail, wow, crush, Macy, crush. Yeah, I mean the inflation, the fundamental overall for retail is not that promising right now, so yeah, expect that. Disney, who doesn't love Disney? But it's a stock. Nope. I have a calendar spread a while ago, and I closed it because property volatility was increasing. When you sell calendar spread, you want to sell on high volatility, so the premium is high, and then you want the volatility to slowly dies down. But after I saw it, I think the volatility was actually expanding. Yeah. So at some point, I'm like, okay, take a little loss, $20 loss, whatever. Right? Not doing it for me. I held it for 1, 2, 3, 4, 5, 6 days or a week. So, and yeah, doesn't seem like it want to go for me. So close the calendar spread. I don't really do much calendar spread. That was just probably I was like, oh, let's take a trade just to test how it's like. Yeah, it was just more of a test trade. Yeah, so it was just a single contract, as I remember. Anyway, let's move on. AI stock. ATVI, double top right here. Nothing. Okay. This is like a AI index, Robo AI index. Yeah. Nothing. They're all double topping. This guy broke up. Alright. Comes back. See what's going on. Let's mark it. Next. Nothing. And nothing. Wow. This guy, look at this long tail. Sellers really sold the stock. Really got out, or short, whatever you want to call it. AI is okay. Yeah, so let's look at the airlines. delta, I think no false hammer, right? Up, sideways, up. So, alright, so when there's no false hammer, then it will break out trade. With a long bar breakout, you cannot take this next bar high. It's just way too gappy at that point. But it still went. And some people will trade this. Yeah, it is a trade, but this large gap make it more difficult to be in profit. But in hindsight, yeah, everything's perfect, right? That's great. Usually, gap and then a few more buyers come back in and test again. So this guy do that. Just a few more bar went up to here, and then this is an engulfing candle. Right? It engulf all the previous bar because of the length. And this tell you when it's red, yeah, people are taking profit. So you need to get out. You need to get out and take profit if it is a breakout trade. Yeah. Pulls out. See, that's a clean break. Yeah, that's why I stopped there. You see all these top, right? And then right here. Yep. Okay. Yeah. I haven't played airlines for a long time, just would like to look at what they're doing. They're not in play right now, but they're doing this. Have you seen it finally broke a 200-day moving average, right? That red line. It broke the 200-day moving average, but look at the pullback. It's still substantial, 50% of the breakout. He pulled all the way back here, so yeah. Not really in play, not the hot stock I want to play. I want to be playing that everybody was looking at where the money are flowing in, right, massively. Those are the hot sectors. It's very easy to tell. It's trending for 6 months, just going up directionally. None of these pull back like that yet. So yeah. Right. So right now we always see some of those, the summer pullback, whatever you want to call it. Yeah. So okay. So that's about it for today. Yeah. Really. Just looking at potentially, market's open in 5 minutes. Just potentially, look at this. Actually looking at gapping up. Opening gaps up. So, yeah. So, in that case, let's move this out of the way first. Let's move this text box out of the way because okay. Let's see. Where is my profit target? Half or maximum potential 75. So if I make 35, 37, 40 bucks on this trade, on each contract, close it. That's all. Right now, I have to wait for a few green bar for that to happen. But it looks like today, right now, open up. Who knows? They might sell right back in. Oh, there's something to push up. Is there news? Let's check the news now. All right. CNBC.com. See what the pre-market news is saying. Media's industry in turmoil. Nothing much slip. Not really. Yeah, who knows? Price cut on electric. Okay. Yeah, ChatGPT match 1% creative thinking. Okay. AI is hot. China's second quarter GDP miss, so the market not good looking. AI 1 trillion is opportunity, but well, whatever. This predicts, right? People prediction, whatever. That's their prediction. I don't predict the market. Right? I might make projection fundamental analysis, but I don't want to make prediction. And from my experience, yeah, maybe you can say I'm not smart enough to do that. That's fine. That's good. I know where I stand. I stay with my limit. With my skill, with my parameter, and I make consistent play where I have high probability of making money. That's all. That's how you make money. Take good trades, take good consistent trade, good setup, consistent good setup. Okay, so that's all for today this morning. Thank you everyone for watching. I will see you guys next time. Have a good one.